Hello and welcome to this live session, the part-time traders live session. This is going to be a briefer session because we will just hit the nail on the head, moving straight to those charts and discussing what we have seen in them. Okay, there is absolutely no need wasting our here or not. Okay, all right. Before we do that, let us look into the just give me a minute. It seems I'm watching myself. Okay, should be fine now. All right, before we do that, take a look into the Forex Factory economical calendar to see what's been going on. We have sorry, to see those high impact news announcements that are scheduled for tomorrow. Tomorrow is all day G7 meeting where we might see a little crawl due to that news announcement. But the most important here again is the Canadian dollar employment data that will be released tomorrow. We'll be trading this news announcement live. We'll be in the market to trade this news announcement live, watching to see if we'll be able to grab one or two trading opportunities. So by tomorrow we'll come here to trade this pair. So we are going to have just one live session tomorrow, and that live session is going to cover this news trading event. Okay. All right, let's move into the charts, looking into the Australian dollar against the New Zealand dollar. This is the 4 hours time frame. Well, there is nothing much to talk about in this pair. What we are clearly seeing here is that price is in a channel. All right, yesterday confirmed the upper boundary of that channel, and the directional bias for the flow of this channel is to the downside. We took a trade yesterday. Somewhere, okay, day before yesterday, price pushed against us. We anticipated that upper channel leg, which actually played out, held price. Price is now coming back down. Well, if we were bold enough, if we were buoyant enough to keep our trade running for this many loss very close to our stop loss area, why wouldn't we be bold enough to hold this trade to our proposed target area? That's the lower boundary of this channel. So I wouldn't want to close this trade out because the technicals seems to be in our direction in the 4 hours time frame. In fact, if you draw if you are a channel trader, let's take for instance this fall to the downside here. The moment it got broken, the moment price got broke that line, it pushed to the next level of resistance, confirming that area as resistance. Now we have an internal swing, this one here, and it seems price has broken that swing. If you draw your line, okay, just showing you this. If you draw your line, that swing has been broken, so with just a little hesitation we should still be coming down. Then the next time around, for those trading the channel, is to turn to the upside, connecting the swing to the downside. If price breaks that swing to the upside, then it is likely going to move to the next boundary of that channel. So for now, this price action should be in our favor, as this little retracement trend line has been broken. That line has been broken, this one here, so we are just going to keep it. There's only one level now holding price, where price has been finding problems pulling through, which is this level here, this one, this particular level. If price is able to pull through by tomorrow, then we will be sitting on a highway free of traffic to the next level of support. You will see that in the 1 hour time frame. Let me take out this. Okay, in the 1 hour time frame, this is the level of support I am talking about. If price is able to take out this level of support, then we'll be sitting on a highway free of traffic for price to cruise to the next level of support, which is the lower channel leg. So everything still looks good, but this trade is suffering a bit. It is facing some hard times because it is directly against this intraday level of support. All right, but in the very long term, it's expected that price is going to push to the downside. So let's be bold again, just the same way we kept the trade when it was pushing to our stop loss zone. Let's be bold, keep the trade. Hopefully we are going to see ourselves down here by tomorrow. All right, the next pair to be reviewed is Australian dollar against the American dollar. What do I want to show you here? Clearly, overall the pairs, it's been difficult for intraday traders to trade the forex market, finding trading opportunities successfully. The intraday time frames are in total mess. In fact, the trading opportunities are not just there. You can see in the Australian dollar against the American dollar, price just pushed to the upside, went sideways. This is quite difficult for intraday traders to trade. The price action for yesterday and today, if you combine those two daily box indicators happening around the daily level of resistance, that red line, you are going to have a railway track. Can you see that? Those are railway tracks. Let's zoom into the daily time frame so you can see that clearly. Okay, now that's it. This is the daily level of resistance here, former support, coming around in the air, acting as resistance. Okay, if you combine those two candles, we'll be having railway tracks or even a pin bar, okay, a hammer formation. But this is valid, it is valid, but I wouldn't want to get involved, because if we place our sell stop order somewhere in there, there are levels here that has been acting as resistance. The whole of this zone is not a clean zone to place my sell stop order against, and that is why I will just be avoiding this trade for now, okay, because all of this area here have been problematic zones. So if we place our sell stop order a few pips below, somewhere in here, we will be clashing with that area that has been acting as resistance, which may act as support. Okay, so we are not taking this trade. I just want to show you that it's a valid bounce of that area of resistance, but it's going to be more of a problematic trade. Okay, another one is in the New Zealand dollar against the Japanese yen. We also have, if you look at the intraday time frames, push to the upside, sideways price bias. We also have, is it a bearish engulfing? Well, let's see that happening around the daily level of resistance. Zoom into the daily time frame. Okay, look at this. Those two candles right there happening around the previous swing high. Okay, they are valid, but you wouldn't want to trade against the long-term hint, which is this pin bar in the weekly time frame. You wouldn't want to trade against that. Remember, the long term will always supersede. Okay, the long term will always lead in terms of directional bias. It is possible that price can come back down, but it is sensible to avoid taking trades in the shorter time frames against the very long term. Here in the weekly time frame, this pin bar is telling us that, hey, price can stay up for at least 2 weeks. All right, 2 weeks. We took a trade here and we have micromanaged that trade for some reasons, so we closed that trade out. There is no regrets about that. We'll keep searching for valid trading opportunities in the direction of this pin bar. Therefore, these railway tracks in the daily time frame, we are really not going to be trading them, because the weekly time frame, which is the long term, is pointing to the upside. I wouldn't want to trade against that. Okay, the next one I want to show you is the Swiss franc against the Japanese yen. You can see again price touched the daily level of resistance. So that rejection is what we are going to be talking about. But before then, the 1 hour time frame, this was more of a better one, but again, a very horrible one to trade in intraday time frames. Let's see the daily time frame. Now, in the daily time frame, I want to show you that price is trading around an area of resistance, and this area of resistance is the best point for traders if you are looking to go short. Okay, the daily time frame, we are seeing a very weak reversal formation. It might be a spinning top, but it is a low quality reversal formation, so we are really not going to be taking this trade. In the weekly time frame, quite a bit of confusion here, a range, and in my opinion it seems to be pointing more to the upside. So let's avoid taking that low quality signal coming from the daily time frame. It is possible that price can push to the downside, but because it's a low quality signal, we are not going to be taking that trade. All right, let's look into the euro against the Japanese yen. What do I want to show you here? Intraday time frame, nothing to trade. Okay, now in the daily time frame of the euro against the Japanese yen, you can see how that area was acting as support. In fact, let's shade that. Let's shade that zone. Just shade that zone. Okay. All right. Excuse me. And take out the auto scroll feature. Okay. Now, this area has been acting as support. It got broken and price has made a pullback to that zone, and we are seeing a reversal candle, a pin bar at that particular area of former support, which is now acting as resistance. Well, this is valid. It is indeed against the sterling pound. I am liking the setup in the euro against the sterling pounds than this one. Okay, so in order to be selective, I am going to avoid trading this one for now. Let's go with the euro against the sterling pounds. That's simply because this pin bar seems to be bouncing off the inner trend line in the daily time frame. If you let me take out this. It is bouncing off that inner trend line. Okay, remember, we want to see those bounces around outer trend lines, but at any rate, it is resistance zone, and the best point, the best directional bias or course of action here, if you must trade the euro against Japanese yen, is to keep searching for short entries. All right, the market has just closed. Let me take a look at this. Okay. All right, enough of the euro against Japanese yen. Let's look into the only pair that will be taking a trade at this time, which is the euro against the sterling pound. Now, I'm interested in this pair simply because it seems we were in the range. Seems this review is just too long. I'm sorry about that. We're in the range. Okay. Range, resistance there, but we saw price push to the upside but got rejected. Okay, got rejected today, and that happened around the daily level of resistance. So let's see the daily time frame. Now, this is the daily time frame of the euro against the sterling pounds. That area there is our level of resistance. All of this again, some area of resistance. You can see the rejection. Look at the rejection right there. A price pushed to that level but faced heavy rejection and was driven back down. In this case, the next immediate move should be something of this nature. It should be Seems to be jumping to the upside. It should be a bearish candle. That's what I am expecting in this pair for tomorrow. So what we are going to be doing now is to place a sell stop order. I'm going to be doing 3% in this trade. So sell stop order. I have my indicator installed already, so I don't need to apply again. I'm just going to depress my O button on my keyboard. Sell stop order. Just few pips below the pin bar. Not necessarily 5 pips. You can even do 2 pips below the pin bar. If you can't calculate 5 pips, just place it few pips below the pin bar. I have to stress that, few pips below the pin bar. Okay, stop loss, let's just keep it few pips above. All right, above that range. I wouldn't want to keep it too tight to that level of resistance. We are not trading to make losses. Safety first. All right, safety first. This is the level of resistance. Let's place it ahead. We are not trading to make losses, so don't tempt price with your stop loss. If you tempt price with your stop loss, you'll be surprised that that stop loss will be hit. So give it enough room. Let's take the trade little by little. We will stay on top in this business. Okay. All right. So the since I lost those parameters, let me get them back. I'm not seeing what's going on with this. Okay, let me delete that indicator. All right, I'm still using version 2. Let me get version 3 to work. Okay, 3%. All right, now my O button on my keyboard. Stop loss few pips above. Okay, sell stop order few pips below. Stop loss above that level of resistance. Okay, now these are the parameters for this trade. The entry is around the 0.8774 level. The stop loss is around the 0.88556 level. It is recommending 2.15 lot size based on my account size. I am risking 3%. If I am hit on my stop loss, I am going to be losing $2,352.43 dollars. Overall it's about 81.6 pips. Okay, the gap, the distance from the stop loss to the entry is about 81 pips. So I'm going to place the trade confidently. We have done our homework, we have done our analysis, so place the trade and walk away. 2.15, that's my recommended lot size. It's a pending order, it's a sell stop order at price. Price is what? 0.8774 level. 0.8774 level. Stop loss is at 0.8855 level. 0.8855 level. Okay, those are the values for this trade. Entry 0.877 level, stop loss 0.8855 level. Okay, lot size 2.1. So I'm going to be taking the trade. If you find any problems with this trade, it's better to alert me right now. Please tell me about it, not when the trade price is moving towards the stop loss, because the stop loss level here is final. We are not going to be making any further adjustments. Whatever happens after we take this trade is going to be final. Okay, all right, so placing the trade. Okay, order is set there, so price is going to do its own thing. We hope we are going to be seeing price pushing to the downside for tomorrow. Enough of that. Finally, the euro against the American dollar. I just want to show you that price actually was trading around that level of resistance, and hey, you don't want to also tempt price or risk your profit around levels of support and resistance. So that area there is a problematic zone. Today is already Thursday, tomorrow is Friday, so we closed out that trade completely. You can also see in the daily time frame that that candle is not a friendly one. This is not a friendly candle. I don't really like it, and I wouldn't have held that trade beyond that. So it's good. We have closed the trade. If it keeps pushing to the upside, we are going to close our eyes, pretend as if nothing happened. Okay. All right. Thanks for being here. One trade, euro against the sterling pound, still around the closing area. Let's give it some time and see what's going to happen. If you have questions, contributions, please feel absolutely free. As usual, ask them in the live chat window, and we will discuss there together. We'll talk again this time around, not before the London market opens. We'll be talking few minutes before the Canadian dollar or employment data release. Okay, one live session tomorrow, and we'll call it a weekend. Bye for now.